So maybe that's why we've seen a reversal in November, right? Money coming into the markets. This top part is November, so the dark blue. But up until there, that's year to date. What I'd like to point out to you, this is silver. This one is silver. This one is gold. Can you see that even though, and this is spot silver and spot gold, by the way, and I really want to be careful about that because we've been trained that when they talk about the spot market which is a contract, what they're really talking about is not gold. It's a contract that's supposed to represent gold. But as I've shown you recently, there has been a decoupling between the spot market and the physical gold market. And these are making highs, and that protected your wealth in a down market. I mean, it did. It fell, both silver and gold fell less than anything else. And in an up market, it's performing well as well. But that's a contract. So don't lose sight of that. Because the reality is that everything is still one big trade and everything is coordinated. So when the markets implode and those that have used borrowed money to buy stocks or bonds or anything else get those margin calls, they have to come up with money or their positions will be sold out. And a lot of times where they get that money is from gold contracts, because that's what the market will buy, not the illiquid stuff like we've been talking about for, well, frankly, not just months, but years. And the problem is that we are a consumer-driven economy. That means that we are counting on the consumer to continue to consume. And if you listen to the talking heads on TV, what do they say? The consumers really held up so much better than what we thought that they were. And they've taken on a lot more debt to attempt to maintain a certain standard of living in the face of this inflation. But confidence, which, remember, this is a con game. That means everything is based upon confidence, right? Consumer confidence that inflation, the Federal Reserve will be able to get inflation under control. Well, guess what? Both the level of inflation, the confidence that the inflation is going to stay low, as well as confidence that people are still going to have the incomes to continue to consume, have declined to a 4-month low. They're going to go a whole lot lower. I mean, you can see it. But if 70% of the economy is consumer driven and the consumer can no longer consume, what do you think is going to happen? That's why it's a Jenga economy. I can't tell you which domino is going to fall first, but they are already falling. And it really doesn't even take imagination. All you have to do is look around and you can see what's happening. And how do you think a desperate government might respond if they really feel threatened or they really get into a bind and nobody will accept their fiat money anymore? Well, here's a great example of that. Gold miner ordered to sell 20% of refined bullion to Ghana. And Ghana, the government, and Ghana is Africa's second largest gold producer. And they've ordered large mining companies to sell 20% of the metal they refine to the nation's central bank as the government embarks on a plan to barter bullion for fuel, because the CD, which is right here, that's their currency, has dropped 57% this year. It's in free fall. So who wants to take it? Nobody. Now you might be thinking, well, that's Ghana, and that could not happen here. But historically, it has happened in the US. And even in 2016, it happened in India. and Venezuela and Argentina and many, many, many other places. But gold is real money. And it is accepted as real money globally. The reality is, though, the government has also ordered even small-scale miners to sell their gold to state-owned precious minerals marketing company. So a lot of times people will say, well, what about gold stocks? Well, this is a risk that the gold stocks run. You know, maybe it'll happen. Maybe it won't happen. It's kind of hard for me to know one way or the other. There is very strong historic precedence for governments to confiscate gold. And we have recent examples, this one being one of them. And it's hard for me to imagine, and there's so many different ways that you can talk about confiscation or names that you can give it. I mean, are they saying we're confiscating gold in here? No, but it certainly looks like a confiscation to me, because these gold miners are being forced to sell their gold to the central bank in the form of the CD, the local currency, at the spot price, which is a contract that's easily manipulated without any discounts or anything else. So do you think that by manipulating the price of gold over all these years, by getting you not to really want to buy gold, because after all, like we saw, you know, it's performance is actually better than anything else, but they don't talk about gold as if you should hold it. But the reality is if you don't hold it, you don't own it. I want you to realize and remember that the global yield curve just inverted. And what that means, bottom line, is something extraordinarily nasty this way comes.